Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of May 15th, 2016. And man, it's getting interesting. I've got a quote up here on the screen from Benjamin Graham. He says, in the short run, the market is a voting machine, but in the long run, it's a weighing machine. This is a great quote, and it's withstood the test of time. Benjamin Graham was a economics professor back in the 20s and 30s. He was influential to some of the best, most successful investors ever, including Warren Buffett, who was so influenced by Benjamin Graham that he named his son after him. And what this quote really means is that, in the short run, price moves are driven by emotion and opinion, but over the long run, value and earnings are what are weighed by the market. That ultimately determines longer term price. And you can see this bear market rally that we had from mid-February up through towards the end of April. That was primarily driven by emotion and speculation. Now, I've been saying for months that we are in a long-term bear market that has started, and I will show you that the pattern that I'm looking at, which is really coming from another market luminary, and that is Charles Dow, the founder of Dow Jones, co-founder. And his theory, he said, hey, trends are defined by a series of lower lows, lower highs, lower lows, lower highs. A downtrend is defined by that. And you can see that now. This actually was lower. It came really, really close, but it missed this previous high. And you can see it certainly has shown that it looks like it's going to be turning down again. It's heading down. Now, in this, we had a couple pretty dramatic moves down, one last summer and one at the end of last year. And the same Dow theory concept applied that signaled, on a little bit smaller scale, when these moves were going to happen. And here's lower low, lower high, lower low, lower high, lower low. And it happened back here too at the end of the year. Lower low, lower high, lower low, lower high. Boom. Now, what do we got going on today, right now? After this bear market rally, we've got this pattern beginning again of a low, a lower high, and what looks like a new low coming. And if we take out this low here, which is at 2037 on the S&P 500, really good probability, high probability that we're heading down. We're going to take out this low here. Now, it may not be as dramatic as it was, but this pattern is really likely to continue to go down and put in new lows. And that's my forecast. That's what I'm looking for. And when we talk about the market weighing, what they're really weighing is corporate earnings. And let's take a look at that. So here's an article from MarketWatch showing a chart of S&P 500 earnings growth. We just had the worst quarter since 2007 in terms of corporate earnings, dropping pretty substantially. And we've seen several stocks that have dropped substantially as a result of poor earnings reports. If you remember a couple weeks ago, we got Google, big gap down, and now this lower low, lower high sequence, and it looks like Google is going farther down. Here's Microsoft at the same time frame, big, huge gap down here, lower low, lower high, strong evidence that it's going to continue down. And finally, Apple, again, same chart, same story, huge gap down and continuing to drop pretty dramatically. So that was a couple weeks ago. The tech stocks really beginning to lead the way down. And then last week we had several retailers reporting, and I had said in my update last week that retailers could be what finally lead the market down. And here's Macy's. They reported gap down, very disappointing results, and the stock dropped significantly. Nordstrom's, same picture, huge gap down, huge drop, 14% on Friday. Disney down significantly, 7 or 8 point drop on their earnings announcement. And finally, JCPenny reported, and they disappointed as well, and continued this kind of awful slide. It looked like they were going to recover, but look at this drop from 12 down to 758. Now lost almost half of its value. So this coming week, we got some big news coming up. We've got Home Depot, Lowe's, Cisco, Walmart, all reporting. So these are really, really big companies, kind of bellwether companies that could give a real signal about the direction of the economy and the market. And they're all reporting earnings this week. And I think any sign of weakness, and we're going to see a pretty significant move down. So we're back on the S&P 500 here. Again, we take out this low of 2037. We're going to get a pyramid trading point confirmed here, and we could be starting this next leg down that eventually takes out this low and continues this this bearish market with some real momentum. And we're ready for that. We got some short trades we're taking already, and we've got more lined up to participate in this down move on the market. So let's be watching for that. Also coming up next week, the FOMC will release their minutes from their last meeting and give their view on the economy and their outlook on whether they're going to raise rates and when. And people will be watching that very closely. There'll be some volatility. So earnings in the FOMC, I think, are what are going to drive the market this upcoming week. And it's probably going to be pretty volatile, pretty interesting. And the high probability is, again, we're in this next downward leg and heading down for some new lows here in this trend. Let's take a look now at gold and oil, as always. Gold pulled back a little bit last week, but that's really just part, again, this dramatic move up from its lows. 5 or 6 year downtrend broke out. We had confirmed this back at 1113. So if it crossed that line, it looked like the recovery in gold was beginning, and it sure has. And it's putting in a series of higher highs, higher lows. And particularly if the market heads down dramatically, you could see this flight to quality in gold. It could really continue to be strong. So, it may pull back a little bit more, but it is recovering and headed up to the targets we gave on the weekly charts over the last couple months. And oil continues its recovery as well. We said when it went across 3709 that the recovery was underway on oil, and that certainly proved to be true. It's putting in higher highs, higher lows, higher highs, higher lows. It put in a new high in this recovery wave, this corrective wave here, and ultimately it's heading up, between $60 and $80 a barrel in this recovery. Now it'll be volatile. It'll be pull back, go up, pull back, go up, but it's going to continue this trend. That's the high probability. It really looks like it, and we're trading energy stocks. We're long on energy stocks and doing really well on those as well. Well, that's the update for this week. Next, this upcoming week will be really interesting. The FOMC and earnings from these big companies, Home Depot, Lowe's, Cisco, Walmart, and many, many others. So stay tuned. We'll continue to provide updates, and it never a dull moment. Thanks.